Hello guys, right, Sunday morning, and I'm always watching, well, not always watching price, but watching price and always learning. And MT5 is a new sort of pet project, and I'm a bit of a Neanderthal. I'm not keen on changing platforms, as you probably gathered from many of my videos, but needs must, and MT5 is obviously the future compared to MT4, and you know, I like TradingView and others as well, but I'm still sort of stuck in the MetaTrader rut, as it were. But whilst I was trying to get my head around this, I thought about this situation with the RSI histo. It doesn't work as well on MT5 currently as MT4, but you know, for example, I just realised that I can't put the higher levels, what would have been the 40 levels on MT4, I guess are 80-20 levels on MT5. You put them on and then you change time frame and they delete. So it's obviously a bug with the coding, so lots of room for improvement there. And once again, the call to any coders that are fluent with MT4 and MT5 code, any help would be greatly received in indicators that I use on MT4 that, in my opinion, are priceless. And you know, I've added back a few indicators that just help scalping, time of day and stuff like that, the daily line box and so on and so forth, and all these RSI histo type things. Got the daily open one here, so that's good. You're currently looking at a complete mess of lines on here, but all I really want to express is how, you know, from just a couple of time frames you can easily tell what you are looking at trading. Upward trend on the daily, clearly the RSI histo, which is the emphasis I want to make on this video, the fact that you would not consider on the daily chart that this was in any way, shape or form an opportunity to keep trading short. Then if we look on the H4 once again, back on that daily, you can clearly see higher lows, and then lower highs and lower lows, which is a downtrend, which is why that's drawn there, broken through that, attacked that daily resistance level over there. RSI histo, strong momentum, which kicked off this whole move. H4 clearly low, high, and once this high had been broken by price here, we could connect that ascending trend line. Now, you know, I've talked about this on Twitter tweets. It's important for me to not rely on moving averages, because all of a sudden, you know, you will realize that you just don't look at them at all. And this occurred to me with the hourly 80 EMA on every time frame. There's just no point in them being there, because it confuses other people. And really and truthfully, in my opinion, you should get into the habit of drawing these lines manually. You know, I mean, all that they are is connecting a number of time periods, and you know, the faster the time period, the faster the lower the number of the EA. So this could be an hourly, well, an H4 8 EMA with 8 candles, and you would follow that line up there. And this one could be, say for example, an hourly or an H4, it'll tell us the number of bars there, an H4 28 or 30 EMA. So you can you know, dispense with MAs or EMAs or linear weighted double moving averages, and just use get into the habit of drawing the levels, and that way you are more in tune with what the price is actually doing. Again, in my opinion, it's just best practice. So once again, massive power to the upside, minimal power to the downside, strong power to the upside, little bit of a sort of boost to the downside if you like, but you know, all this support, daily levels here, and you can see how price came and hit that daily flip zone that I talked about, or PP price pivot zone that I talked about in the previous video. That was what got me into the long trade first thing this morning. And as mentioned in the previous video, price never moves in a straight line, even though we might expect it to fill the gap of these clean candles here on this H1 chart. Zoom in a bit now. It doesn't have to do it in the required time that you're at your charts. Let's say for example this morning, so as a scalper I'm in, took me 30 pips, well 35 pips, watched it go up another 40 or 50 pips, then it's pulled back, and once again you could have got caught into massive drawdown. These moves are huge on this ETH USD. So just don't expect price to go in a straight line. This is why swing traders use huge stops and tiny positions. I'd rather use huge positions and tiny stops, just the way I prefer to trade. It means you're not I can sleep at night and not stressed out wondering what the hell, because the longer, in my opinion, the longer you're in a trade, the more at risk you are of either being shaken out of that trade by movements like this and closing with a loss or a tiny profit. Just get in and get out. I mean, excuse me, the first guy, and I'm so grateful that I got involved with the trader when 16 years ago, who was a scalper. And he lived and died by it, and he used to make me laugh because he'd say, oh yeah, that's another quick scalp there, that's paid for the kitchen, another quick scalp there, that's paid for the holiday to wherever. He was in Australia at the time, Brit in Australia, and another scalper Brit was in New Zealand as well, and he was the same, because I suppose they all get together, these guys. We were in what used to be called a talk room then, a chat room. And they were, even way back then, they were impressing me with their attitude to trading. So everyone's different, and everyone has to find their own niche. But for me, in and out quick, and it's a skill that can be learned, and in my opinion it reduces the stress of whether you're right or not, because you're in and out of trades. You've got fixed stops, tiny stops, you've got fixed targets, not necessarily tiny targets, because you learned where price is going to find sellers or buyers, and that's what it's doing. That's all it's trying to do, is find liquidity. Price is going to find the weakest link in the market. They're going to shake out the people that have put their stops too tight, and the institutions that have got orders and things like that at particular levels, and they know that at this point here, where there'd been a lot of toing and froing, in other words a lot of battle between the buyers and the sellers, that there is going to be potentially a similar thing here. They know it, they target it, and they capitalize on it. And if we watch it enough, you can do it the same. So back to the original reason for this video, RSI should, and these trend lines should give you the idea of what you want to do. I want to be long on this thing. I've got an alert over here. You can just see it hiding down there. It's based on a lower time frame 3 candle reversal. I'm looking for it to approach this 30-minute level here, because we've had a 3 candle reversal down on the 30-minute. Well, it happened there actually, but this candle is acting as the ultimate low now. This is the penultimate low there. The high of that would be a new trend to the upside, and if you look on the lower charts, on the line chart, then you can see the trend in place there. High, low, slight pullback, lower low. We need to come high, pull back, break the high of that high. That is a new trend to the upside, and then we can get involved. I talked about this a couple of videos ago, high, low, lower, high, lower, low. We needed a trend to break that. This to me didn't count as a proper trend. We hadn't come back to test this level here. When we came back, I talked about this in the previous video, that if it breaks below that and breaks that low, then it's going down. That's what it did, but I'm not looking for shorts, I'm looking for longs. So now I want to see a new trend to the upside, and then hopefully we can attack this H1 clear area here, which I'll draw a thing on that, a rectangle. This sort of area here is what I want to be capitalizing on if it reverses in the direction of the main trend. I'm not really interested in trading short into all of this. You've got this stuff here. Again, apologies for stumbling around this MT5 platform should I say, but that's all support there. Then we've got no gap to the next support, which is here, another area of a problem area. No surprises. Then there's a gap between there and there. Look on the candles again, nice gap of solid candles to that sort of area there. So we could put a line on there. Let's find the line about there. So potentially that would be a trade between all of that rubbish and there. So as you can see, again, you know, you've got it's easy to see this. You've got a combination of candles there, that's support. You've got a combination of candles there, that's a problem area, clean run here, clean run here. This is what I'm waiting to see, whether we can get a run up to that, and that's just a trend line there drawn on the top of these two candles. Nothing indicator drawn. So sorry for the slightly rambling video, but there's the level up there, flip zone, close and open of that candle. So nice gap there and a complete mess below. So, and watch that RSI to give you an indication of what you want to be doing. The power is all to the upside. Okay, thanks for watching. Have a good rest of the weekend.